Good morning and welcome to the internet's only live daily housing show exclusively on BAM. Hot Sheet. The Hot Sheet covers what you need to know about the real estate industry in a 24-hour time period. On today's Hot Sheet, I will discuss Jerome Powell's testimony on the state of the economy, KB Home's latest cancellation rate, and a home price outlook from Mortgage Banker Association. This is updated, new, and fresh. Today is Thursday, June 22nd, 2023. I'm Byron Lazine, and the Hot Sheet starts now. Okay, good morning and welcome back. Let me know in the comments where you are tuning in from, and let's jump right into Jerome Powell's testimony yesterday. Jerome Powell, according to Bloomberg, defies critics and makes case for why rates must rise. In the Wall Street Journal, Fed's Powell says interest rate pause is expected to be temporary. Federal Reserve Chairman Jerome Powell said the central bank was likely to raise interest rates in the coming months, but more slowly than previously. Fed officials left rates unchanged last week after lifting them 10 straight policy meetings to combat inflation. But investors, consumers, and borrowers shouldn't think they were done, Powell told House Financial Services Committee on Wednesday. He actually he said, listen, I never said the word pause. He is saying yesterday in front of Congress, he only said skip. Skip means exactly what he said, skip to the next hike. And so he is defiant in the fact that his belief and the FOMC's belief is that we have a long way to go to fight inflation. Of course, the next meeting is July 25th and July 26th. So we have a lot of data over the next 5 weeks or so that can come out and that the Fed can collect between now and then to see if they alter course. But right now, it appears that he's saying they're going to raise and that the market is going to be pricing in another federal interest rate hike. He also, in his 3-hour plus testimony in front of Congress, talked about housing. Let's go to the clip and see exactly what he said. The clip is coming, I promise.
Raise that. And so I think the challenge is, how do you navigate increases in interest rates when a lot of the drivers of price increases are beyond your control? And I want to raise a specific kind of case study here, which is in the housing market. Because you would agree, would you not, that increasing the supply of housing can help reduce housing prices, right? Sure. Yeah. But what we're seeing now is that with rising interest rates, obviously new investments are more expensive. We've seen housing starts fall by 14% in May. So that means fewer housing opportunities, less supply, fewer workers engaged in building new homes. So if you could just use that as a sort of case study of how you're going to navigate these cross currents.
So interest-sensitive spending is a very important aspect of how our tools work. And in the case of the housing market, what you're seeing is higher mortgage rates. So you're actually seeing demand move down quite significantly. Many indicators suggest that fewer people are visiting homes. The wait time for selling a home is increasing. Housing sales are moving down. Housing starts are moving down. And overall, it's a slowing in the housing market. And I think what you will see, or many forecasts call for the increase in housing prices to slow pretty significantly now. You've seen very large, as you know, increases in housing prices over really since the beginning of the pandemic, and to the point where, all over the country you have housing, people, 5 bids above the ask the second the house comes on the market. Well, that's cooling off now to a more sustainable pace. So what we hope is we can get demand to that part of the economy to slow to a more sustainable pace, and get the housing market back on a more sustainable path where there's a better balance between supply and demand.
I appreciate that. I'm just going to use my remaining time to sort of push you a little further on this issue, not specifically with housing, but given the fact that so many of the factors that are driving price increases are beyond our control. And you talked about core.
Okay. Yeah, he's going to go on to something else there. So a couple things that he said in there. Let me know in the comments what stood out to you. You know, and let me know if you've actually felt a cooling off in the comments of the multiple offers. I've seen, I'll say to Powell's defense there, because I think most agents are going to say, nope, I'm not experiencing, you know, a cooling off on multiple offers. I am seeing signs that throughout the summer, there will be a cooling effect on the multiple offers that were experienced in, say, March and April. But let me know what you're experiencing in your market. All right, let me jump to what they were going back with the congressman there and Powell about housing starts. So housing starts are actually up in May. They said housing starts were down. We covered this on Monday and on Tuesday and Wednesday's show of this week. So if you missed those, go back and listen to the replay, whether you listen on YouTube or on wherever you listen to podcasts. The replays are up. You can go check those out. Of course, if you're a BAMX member, you can get these slides like the one that I'm showing you. All of the daily downloads are available now on BAMX in one place. But you can see here, May is up over 2023 over 2022, and May is up over April of this year. So I don't know what he meant by May being down. Now, maybe he misspoke and he's talking about housing starts being down overall for 2023 comparison to 2022. That would be true. You know, 2022 housing starts certainly in the first 5 months were up for 22 in comparison to 2023. That would be true. But he specifically said May, which would be untrue any way you slice it. You could go May over May, or you could go, you know, May over April of last month. Either way, housing starts would be up. Of course, builders, their index just went positive for the first time in 11 months. So there's been a lot of, you know, news coming out from the building sector. We're gonna actually talk about some more good news from the building sector here in just a little bit. What else he said there was that, you know, they keep trying to get housing into a sustainable place. Well, that's not going to happen going down the path that they're headed to. Here's why. All right. So last year, obviously, jacking up the interest rate, Jerome Powell said, we want to put housing into a recession. They did that. The housing industry and the tech industry both went into a recession last year. That was super clear. It was an easy target. Housing and shelter makes up 1/3 of total inflation. Didn't touch on rent there, on real-time rents. If I'm in Congress, I'm asking them, you know, how much lower is inflation today if you take into account real-time rents, as reported by apartments.com, as reported by Redfin and others. We covered a core logic piece yesterday on the hot sheet showing rents decelerating. Here's actually the chart on that. You can get this over BAMX, where all of our downloads are for the week. You can grab this chart. It shows you that national single-family rent is completely plummeting back to pre-pandemic levels. Nobody pressed him on that. Nobody asked him about that, because that would remove a lot of inflation. He's saying we've got a long way to go to get inflation down to 2%. But myself and many others that are looking at real-time rent data believe that inflation is actually a lot lower than the Fed is saying it is, because they're using such a lagging indicator on shelter, which makes up over 1/3 of inflation. So anyways, what I would have pressed Jerome Powell on is, you know, if you're going to keep going down this path of raising rates, and you're going to start doing that again in July, eventually you are going to break the labor market. There are many that believe that that's the Fed's goal, is to break the labor market, meaning put people out of work, put people on the layoff line. Okay. Now it's interesting. Last year was the year of the resignation. And this year you see very few employees actually searching for a new job in major corporations. This is stat out of major corporations. Very few are looking for new jobs, where last year 50% of employees were actually looking for a new job. There's a huge flip there. It doesn't mean that people are necessarily so much happier with their job. It's that they're bunkering down and a little bit fearful of what the job market looks like overall. There's not an abundance of attractive opportunities out there. Okay. And so they're starting to bunker down right now. I get it. The job market's very robust and all of that. But there will be a breaking point if the Fed keeps doing what they're doing and raising the interest rates. Companies will have to make a decision, and oftentimes, when the Fed does this, the job market does break. We go into recession, and then the Fed tries to play catch up. Catch up meaning they're going to start cutting rates. Okay. The whole reason we're playing catch up now on inflation is because we printed way too much money the last 3 years. Okay. When everything was kind of over, if you remember, we printed an extra $2+ trillion on an infrastructure bill that just blew so much money into the system. Okay. Now you've got China saying they're going to be printing money. That is not necessarily good for us. So that's going to be something else Jerome Powell and the Fed has to overcome, the fact that another global economic power could be introducing more money into the system, similar to how we did the last 2 or 3 years. So interest rates continuing to go up. That's his stance. That's what he's testifying in front of Congress. It's similar to his comments the last couple of weeks. Hasn't moved off of them. I see bad signs for what he said, creating a more sustainable housing market when you put people out of work. I think that's going to be ultimately not a good thing, not only for housing, but for the economy overall. He's not solving the problem in housing, which is affordable inventory. That's the problem. And nobody's trying to solve that. They're either trying to create stimulus from the bottom up, where there actually is 5, 10, and 15 offers on a home. You're going to put stimulus onto a home buyer, first-time home buyer who's competing against everybody because it's starter homes. You're doing programs like that, or like we talked about yesterday, going out and creating restrictions on home flippers, as opposed to creating inventory that can be affordable. That's going to be the way to create more opportunities for the housing market and a more sustainable long-term housing market. All right. So there's Jerome Powell's comments on where they're going next. KB Homes had some comments and some reports on their latest cancellation rate. Okay, so in early January, KB Homes said its fourth quarter buyer cancellation rate was 68%, if you remember that. That was far above the industry's peak of 47% during the dark days of the 2008 era crash. KB Homes CEO was clearly worried about the latest cancellation rate, telling investors at the time that depending on market dynamics and backlog levels in each community, we are getting more aggressive with our pricing ahead of the spring selling season in order to generate new orders. Think about all the news we've just covered in the last 2 days on builders and where they're at today. They're feeling the best about the housing market. Their stocks are soaring right now. Home builder stocks are soaring. The index is up over 50% for the first time in 11 years. They're controlling 25% of the inventory. Typically, new construction is not 25% of total inventory, but that's what it is today, thanks to Jerome Powell creating an environment that sellers don't want to sell because the interest rate is so high. So they make up 25% of inventory. So builders are in this actually lucrative position, where in quarter four, when the interest rates were going up and you had these cancellation rates like KB Homes of 68%, they weren't feeling too good. So how quickly that has shifted. Those aggressive incentives coupled with house price cuts seem to be working for the giant home builder. On Wednesday, yesterday, KB Home reported a second quarter cancellation of only 22%. Still a high share of buyers canceling contracts with KB Home. It's far below what they said in fourth quarter, and then also in January, where they had reported 36%. Okay, so KB Homes is this is basically reinforcing the news that we've seen this week, that builders are in a position of strength right now in this housing market. You can see the 68% in quarter four, 36% in quarter one, and now 22%, still well above where they sat from, the majority of 2020, second half of 2020 through quarter three of last year, or I'm sorry, quarter two of last year. So, but they're getting very close to their typical average. If you look at 2018 and 2019, they kind of hung, mostly at about 20% or just under. So they're right there with where they've been historically pre-pandemic for KB Homes, and just more signals of strength for builders right now who actually have some of the inventory that we are lacking in this market. All right. Mortgage Banker Association just revised its home price outlook, and they revised it upward. The group's forecast model predicts U.S. home prices, as measured by FHFA, will jump 0% in 2023, but that'll follow a 1% increase in 2024 and a 3.9% increase in 2025. Let me get the chart up, which will be available for you down below in BAMX. If you sign up to BAMX, you get access to all of the charts and sources here on this show every single day in a daily download. Of course, all of our courses and our member live streams and our private Facebook community. Jump into BAMX today to get access to your hot sheet daily download. MBA Mortgage Finance Forecast just released yesterday. Housing starts. Okay, so they've got housing starts for quarter two being at 1,400 plus, or I'm sorry, 1.4. This is seasonally adjusted, by the way, for quarter two. That'd be the highest for the year. Okay, so they've got quarter three coming down to 1.38 and quarter four coming down to 1.37. That's in the millions. Single family, 874 on housing starts for quarter two, 874,000, but they have single family actually going up in quarter three and quarter four. So they have multifamily coming down at the end of the year for housing starts. We know there's a ton of inventory for multifamily coming at the end of the year, and they have single family going up. Okay, so this is Mortgage Banker Association's projection. Let's just take a look at further down the line. This is their most updated projection. So they've got housing starts. So per the congressman's kind of overall point, I think he just misspoke about May, going back to that Jerome Powell clip. Per his overall point, 2023 housing starts is going to be significantly lower than 2022 with all the data that we have. Okay, so they're projecting seasonally annual report for housing starts at 1.388 million. 2022, we had 1.551 million. Okay, 2024, they believe that number is going to go back up to 1.455. And then 2025, they think will actually be a little bit higher than 2022 for housing starts at over 1.5. Okay. Housing sales now. Let's take a look at this. Their seasonally adjusted rate is in line with what we're seeing from Case-Shiller, from National Association of Realtors as well. 4.3 million here in quarter two, almost 4.4 million. They have that going down in quarter three to 4.2 and 4.2 million in quarter four. This is for total existing home sales in 2023 seasonally adjusted rate. Remember, quarter one of 2022, we were coming off over 6 million sales. So you can see how far sales have dropped with the interest rates going up. That's total transactions. They do have, by the end of quarter four, us getting back almost to 5 million. And in 2025, they have that number up over 5 million for the year, just slightly above 2022 levels, but they don't see that coming for another year and a half. And really, you got to get through 2025 for that number to reflect. So we're talking 2.5 years out to top 2022 total transaction levels. Still plenty of transactions out there. If you're a real estate agent thinking, oh my gosh, there's still plenty of transactions. 4.2 million this year, 4.3 maybe. And then next year is looking at about 4.6 million total transactions. New home sales will go up over the next couple of years. Actually they're projecting it to go up this year, 676,724 and 24. And then 2025, 766. Here's the interesting one to me, because it's Mortgage Banker Association's projection on interest rates. This is what I really want to pay attention to. And here's the one that stood out to me. They've got us at 5.8 interest rate in the fourth quarter of this year. Okay, so they have quarter three at 6.2% this year, and the end of the year finishing quarter four at 5.8. Next year, we're looking, according to Mortgage Banker Association, at 5.6 quarter one, 5.4 quarter two, 5.2 quarter three, and 4.9 in quarter four. But in order for us to get a sub 5 30-year fixed interest rate, we're talking about a year and a half. Okay, so that's just the reality. But they do show us a downward trend going through the end of this year and into next year. 2023, they believe will end at 5.8 again. 2024, they believe will end at 4.9. And 2025, they believe will end at 4.6. Still well off 3%. So home shoppers waiting for 3%. This might be a table to show them. I've got this table carved out. It's down below in BAMX. This is something you might want to, and my writing won't be on it, by the way. So all this won't be on it. But you might want to print that out and just kind of show them, hey, this is what the interest rate is projected to look like. Mortgage Banker Association. I'm sorry, that's the 10-year that I just highlighted. 10-year, by the way, the gap between the 10-year should start to get more normalized. We're at like a 3-point gap right now. If you go to 2025, it's less than a 2-point gap, which is similar to where it's been historically. Okay, but this line here, you may want to just highlight and send to home shoppers that are waiting for 2.75 and 3. Those days don't appear to be coming. That's not the projections that we're dealing with right now. All right, so there's Mortgage Banker Association's revised housing outlook. They do not see prices going down this year. In fact, they see home prices staying flat for the year of 2023. They do see home prices going up 1% in 2024 and 3.9% in 2025. And across those same 2.5-year period, they see quarter over quarter over quarter, the 30-year fixed interest rate going down. Let's take a look at where it might go today. We've got a 10-year fixed that is ticking, a 10-year treasury, that is ticking up. We know if we follow the 10-year, we're going to get some indication on the 30-year. I do believe the 30-year will tick up today based off of this news. And this is really the market digesting Jerome Powell's comments from yesterday. Yesterday, the 30-year did go up a little bit from 6.87 on the Mortgage News Daily Survey to 6.9. We'll see where it goes today. Probably sit back into that 6.95 range that we've seen here the last couple of weeks on the daily survey. And we'll just continue to see. Well, I think Jerome Powell might be speaking again today. So we'll see what the market reacts today on day 2, if he is indeed going to be in front of Congress again. All right. If you haven't done it already, grab your spot in BAMX, further the conversation on Hot Sheet, get access to all of your downloads. Have a great Thursday. We'll see you back here tomorrow on the Hot Sheet. Until then, toodaloo.